Hi guys, hello everyone, and welcome to Founders Unfiltered with Ashutosh Purohit, the CEO and founder of Yenmo. So, hi Ashutosh, thank you for being
Hey,
here. First of all, you have a very busy schedule, I know, right? And thanks for coming here. And I'm very interested in Yenmo, so I'm very looking forward to see like what you say about the topics which we will talk about, right? So, yeah, Ashutosh.
absolutely glad that you took time to have me here. Really appreciate it.
Yeah. So first of all, the first question was in my mind is that you have a BITS Pilani, background. Now that is something for us, for people like me who are like of this generation. We look forward to BITS Pilani as a entrepreneurship temple. We see, okay, her every year like hundreds of companies are coming, like, and so many of our, the people we look up to, they are from BITS, right? So I had this question in mind, like how much of a impact was BITS in your entrepreneurship journey, like from your college days? Did it inspire you? Did you have some seniors you were looking up to? Yeah, I want to be like this, right? Because I have seen that they have crazy atmosphere in BITS. So yeah, Ashutosh.
No, absolutely. I think I'll probably I'll probably go a step ahead and say it's not probably only entrepreneurship. It's anything that you really want to do. I think Bits kind of just magnifies that and gets you out, right? So it turns out that most of the engineers end up wanting to be founders, and hence the founder or entrepreneurship thing kind of gets magnified. But I have a lot of friends, like people have become comedians and musicians and all sorts of things. Like whatever you really, really want to do in life, and maybe I'm biased here, right? Because I'm from Bits. I just feel Bits is like that magnifying glass that just kind of multiplies whatever you put into it, right? But on that front, obviously, I think entrepreneurship has been that thing that I think a bunch of my batchmates also like. If you know about Pixel, right? Pixel Space, it's become super famous now. So Avez was also one of our batchmates, among many others, I think, who have gone on to do wonderful things even now. So it's always been motivating, right? Like people have been working since the first, second year on college to figure out something of their own. So right when I graduated, I had that bug in me that, hey, I want to do something of my own, right? And I think the idea of just being around such people is you don't want to do it because of what it entails, right? You don't want to do it because it looks cool or sounds cool. You've seen how people work, right? They're slogging day in and day out working towards their project. And then you just realize how fun it is for them. And the only reason you want to do it because you really enjoy the grind, right? So most of the people I think getting into this from bits, and again, I'm maybe biased, are in this because they actually love the grind, right? So I think it had been quite early on seeing all these people around me into this that I was like, yeah, at some point I want to do it. And then one day I just decided.
I think this what I can visualize is that Bits got that that kind of I would say virus in you that okay, this is definitely something which I want to try, even if you go into corporate for some time, right? Still you want
Absolutely.
to solve some problems, some real world case world real world class problems which can actually be relevant and can some business can be made out of it, right? So I think
Absolutely.
this there is something which Bits get in at least in the minds, right?
Absolutely. I think it's more on the people who come there also. Like everyone who's come there has some sort of passion in some area, right? As I said earlier, majority of it tends to be towards some sort of entrepreneurship of building something of their own. But even if you look at people who have like ended up becoming musicians or something, right? They have a passion to kind of just do that. And in some shape or form, that's also entrepreneurship, right? Just like building your own brand, or starting like your own music label or something like that, right? So at you just look around people just trying to build something of their own, and that just kind of motivates you. And even if when you're in a corporate, it helps, right? Like you own projects like they're your own baby, and this is something that you want to kind of really see succeed. So yeah, I think it helps even if you're in a
Yeah,
corporate and you're not
actually,
actually starting
I've
out.
seen that there are small entrepreneurs in every corporate at their own level,
Absolutely.
at their very small micro level. They are entrepreneurs. Like they have to handle small projects, right? And from there only, I think you won't call them directly startups, but they are solving small, problems, which is quite relevant, at least at their level, right? So definitely, I think this kind of mindset. I think I've read one book called Lean Startup, right? So it actually mentions this point that there are hundreds of startups in all the literally corporates, right? Which you directly don't say that they're entrepreneurs, but they are doing entrepreneurship at their own level, right? So yeah, that is very relevant. Now I was very curious to know, like, how was this transition, from bits college, then you went on to work, like, and then slowly you went into the, the I was actually reading one of your uh, LinkedIn post where you wrote like how this Yenmo came, right? How you saw ki all your investments have gone in your business, and literally you saw this problem and you start wanted to work on it. Like, how was it?
Yeah, so I'll probably take the first step first, right? Like of just moving from college into work. And I think this is another area where I think BITS does a really, really good job. They have this thing called PS, right, which is practice school, where within the 4 years that you're in college, there are 2 years in which the college helps you find a company where you can do a long internship. So the first year, the first PS that's done, it's in your second year, and that's typically for around I think 2.5 months. And the second one, which is done in your final year, your fourth year, fifth year, if you're a dual degree, is generally for 6 months, right? So you're
Okay.
in a company for a very long time, and you really understand what works in a company, right? So it's not like you're thrown fresh out of college and you're completely blind on what's happening. Like while you're in college, you've been working for a company for 6 months. You really understand what does a company expect from you? How do you perform? What are the skills that you've not learned in college that a company actually needs? So then the remaining 6 months when you're in college, which is figuring out before you join, you spend that time just kind of honing those skills better, which end up like when you actually join the company full time, you're in a much better position than any other person who's just freshly graduated. Is much, much easier. Absolutely. Like, um, to give some context, I myself uh, wanted to join like a core mechanical job, right? Like, because that was where exactly, that was my background, right? Exactly. I wanted to go into something core engineering. So my first few internships were in ISRO and Shell and stuff like core mechanical related jobs, right? And then I had this one internship in Swiggy. It completely changed my worldview. And I was like, wow, this is something that's so exciting. And I didn't know I could just kind of venture into it, right? And that ended up with me kind of joining Swiggy full time and this whole venture into um, learning about businesses and kind of exploring entrepreneurship
Okay,
all of
as
that.
far as like from business, what I can see is that, see, me being a initial founder, I would say, right, and learning a lot from you guys, I would say there's a thing which is common with a lot of not entrepreneurs but innovators. I would say innovators, someone who wants to start a business or work on a certain problem. So what I was thinking is that what is the threshold? Basically, what is the threshold when it is like, yeah, I have this problem in mind. I have something which I can see. There's a clear problem over there, and I want to solve that. So when is the right time to start the business and start creating a team, or I would say start jump into the startup? When is the right time, according to you?
I would say today, like
Today.
anytime where you want to explore something, I feel you should start it, right? If you're super risk averse, don't leave your job, do it as a side hustle, and keep pursuing it. If you are like, I mean, if you have an appetite for risk, like leave your job, figure out something. Personally, I feel the odds of succeeding while building a company are already super small. Like the percentage of startups that actually end up making it big are super small. So trying to do two things together is going to make your odds even lesser, right? So if you want odds in your favor, you're better off just leaving your company and then just going all in on whatever you're trying to do, right? But yeah, I think if you're not that risk averse, you can start something else. So that's my one first thing. Like if you have an idea that you are passionate about or you feel has some potential, like launch now, validate it as early as possible. There's never going to be a right time. I think there'll be a funding winter, there'll be a funding craze. You're never going to time anything right. So there's no right time where the gods are going to come down and say, hey, you know what? I think you should start. This is something that I myself, right, fell prey to because I was just waiting and waiting. Uh,
Like,
like
how
I
long was the wait, if I can Ask like how.
I waited for like 4 years maybe.
Okay.
Yeah,
Hmm.
I did 2 years at Swiggy and then 2 years at Navi and then
Hmm.
kind of left out.
Hmm.
Um, and it has its pros and cons, honestly. Like
Hmm.
fresh out of college, you have like super high energy,
Hmm.
but you don't have a lot of experience on what problems are people facing. But while you get like as you kind of mature, the older you get, your energy might drop. Like, say, thankfully for me, it's not dropped, but
Yeah, I can see
people
that.
might, yeah, you can have people with like, like, because it's not that you're old and you have low energy. It's just that you've gotten to a certain comfort in life, right? You're earning
I
decent
think
income.
comfort zone is the right word over here. Yeah.
Exactly, right? So
Hmm.
you're in this high comfort zone area, and you don't want to do things that involve now getting out of that,
Hmm.
and say walking in the sun to find your next customer, right? So it kind of just stops that. But on the other side, you have tons of experience. You can kind of pinpoint a problem much more better than someone
Hmm.
who's just gotten into it, right?
Hmm.
So
One more
then,
thing, I think just break here one here, over here. What I think is that for a college graduate, a fresher, to completely go into and start a business, I think one more problem comes here is consistency. They do not get into the system properly, right? See, a corporate is also a business at a very small scale, right? So actually, to get into the system, to get into the grind, right, it takes consistently more than the idea. What I feel, right?
right,
You have to go into the system and you have to do it every day, and results don't come. We all know, right? In a very yeah,
right,
results don't come so early. So what I feel is here is that that kind of discipline comes with work experience also. Like when you go into job every day,
absolutely,
almost every day, you have that grind. You have that. Okay, I still have to work. I'll work on my own business itself. That's the transition. That transition is more smoother. What I feel is that, right? And from here, what I feel is that when is that proper idea you came from Yenmo? And I wanted to know like what was the starting point. Starting point is the most curious point. And I was reading one of your posts also on LinkedIn, like when this idea came into your mind to start this.
yeah. So I think the idea for doing something in the financial space was, as soon as I joined Navi, right? And I was one of the initial people at Navi Mutual Funds, right? So literally, there were only two people, like the CEO of Navi Mutual Fund and then me. There were the two of us, no team, and we had just acquired this other company called SL Mutual Fund. Uh, and as part of the acquisition and then figuring out, we were going to rebrand the SL Mutual Fund that we just acquired as Navi, and then rebrand the whole thing, and then figure out a new GTM strategy, products that we want to launch. Where should we play in the market? What's the opportunity in India? And I was doing the research, talking with customers, and I realized the financial opportunity in India is huge. Like, India is a huge country. There's tons of money just lying in like traditional assets. People are super low in financial literacy, and that's growing tremendously. And bunch of support coming in from government also, right? And I realized there's a lot that people can do. And the other thing that struck me was India is like really credit hungry, right? And absolutely right. And I didn't really see a lot being done in the ethical side of credit, like being honest. So it was more that people needed money and there were companies that were giving out money, but it had tarnished the image of loans in the country. Like if I talk to any middle class Indian, like, hey, do you want to take a loan? Straight out there, it's gone. It's completely gone, right? And being a Gujarati myself, right, I was a little taken back because in my community, people generally like very comfortable talking about loans and taking loans. Because generally it's for your business, right? You take a loan, invest in your business, and grow into. So versus when I come and talk with others of my other friends from different other regions, and they were like really averse talking about loans, right? And a big part of that reason was because a bunch of people taking loans realized that the companies were like into really unethical practices, right? So the other piece that came in that, hey, I think there is something in the lending space that we can build,
Hmm.
especially to build a kind of a differentiated lending company, right? That has some ethical standards that I call in my head like a good loan
Good loan
company.
company. Exactly.
Exactly.
We'll come on to that.
Yeah. So
Good
so
loan
that
company
was
is something which is very good to hear on the ears also. Like loan companies are like so many are there, right? And people do
absolutely
not really want to directly interact with them. They don't really like. Yeah, you can continue.
right. Yeah. So that was where I figured out that hey, I want to do something here. And then as I kept working at Navi, I realized that there was this opportunity where people at Navi, so we Navi also offered loans, right? And we were offering loans at on average 20-25% interest rate. And 30 to 40% of the people taking loans had investments in stocks and mutual funds, right?
Okay.
And so these are people with decent credit scores having investments in stocks. And I was like, hey, why are you not liquidating your stocks? And they're like, this money I've put aside for my child's education or I've put aside for my retirement, so I don't want to
That is
liquidate it.
investment,
It's
according to
an
you.
investment, right? I don't want to sell it for this short term 3 month cash crunch that I have, and I'm okay taking that loan. And I was like, okay, then why don't you take a loan against it? And they were like blank. They're like, what do you mean? Like, how can I take a loan against these assets, right? And I realized, well, people don't know about it. And then I went into the whole rabbit hole of why do people not know about it? Did that whole research and then decided, hey, I think there's an opportunity here. So yeah, left Navi and then just jumped into this ship.
I understood. I think you were really solving that problem there itself for a long time. And you saw ki, yeah, there's a certain solution to that. Right. And there's how
Right.
Yenmo started. Exactly. So yeah, let's get into the most interesting part of the podcast. I think everyone will be here for this. Right.
Mhm.
So how is Vicey so different? I think there's a kind of there's a kind of trend around Vicey, right? There's a
Mhm.
kind of trend around Vicey, Sam Altman, and all people who are in this yeah people who
Yeah.
are in this entrepreneurship ecosystem. They know Vicey, right? They know how important can Vicey be. So first of all, how did you get into YC? How was the journey into getting into YC? And of course, more interesting, how was YC? And what did you actually take from YC? Something which I took from YC working with 4 different clients who are funded by Y Combinator, I think is the most important thing is networking. Like that is the crazy thing over there. But apart from that, what do you think? Is that you okay? This is what how YC made it different in Yenmo.
Right. Talking about how we got in, honestly, YC was a college dream for me, right? I'd been a fan of PG, Paul Graham, who was the founder of YC since college itself. So reading his essays, which he's very well known for, etc., and had heard about YC back then. So always decided that if I do start a startup, I would obviously try to get into YC. But funny enough, now sitting here, I realize that I didn't probably put uh, as much effort as some people are doing into the whole application process and everything, right? Uh, yeah, so I've seen a lot of people putting a lot of effort, like they kind of get 10 people to review their application, get referrals inside, get people to critique every bit of their application, figure out the pitch perfect thing. And honestly, for me and Aryan, I think we were both new to this. We didn't know what we were doing, right? So we just like filled out the application as is, didn't get any people to review it and just submitted it, right? And we were rejected, being honest, the first time when we applied. But the good thing is we did get an interview call based on the application and then got rejected after the interview. And the good thing about YC is they come back with feedback, like why did they reject you, right? Like, hey, these are the reasons why. And then, so they gave us a couple of reasons, and then we ended up kind of working on them over the next couple of months. A couple of them were like, hey, like you're too early. We don't have any market signals. Like, build some initial traction and then come. So within the next, I think 3-4 months, we were like two guys knowing no contact, like in the big financial realm of people. And then we ended up in the next 3-4 months getting on board an NBFC, tying up with them, partnering them, and even launching, getting customers on board, and all of that, right? And then ended up applying with YC again. And then we got an interview call, and then finally got in. But again, no fancy referrals or applications and stuff. And I think that's the beauty of YC, right? Like, even though there's all these things that you can do to optimize, I think at the core, what they're looking for is amazing founders. I think the idea could change. I mean, if your idea is interesting, that's awesome. If it's amazing, that's even more awesome, obviously. But I think the thing that they back for is the founders, right? Like, if this idea doesn't work out, are these founders capable of finding another idea and just going after it, right? Because even in uh, not courageous enough also is will they end up finding an idea that eventually might work? Like, is the probability of them doing that higher than the average, right? That's what they kind of back for. And the second big part that they look at is founder market fit. Like within the market that these guys are trying to solve, are these the right people trying to solve for this market? Like if I have an experience in say food tech and say fintech, and I'm trying to
Mhm.
solve a logistics problem, I could do that, but it just makes it so much harder for me, right? Or for me to solve a problem
Mhm.
of I don't know, like maybe electric vehicles or something like
Mhm.
that, right? It just makes it exponentially harder for me to solve
Mhm.
without having any
Actually, a
expertise in that,
similar
right?
thing. I was just going through a podcast of Naval Ravika, right? So what he was mentioning is that everybody knows about product market fit. What is it and why you should go for it? But this founders market fit, this is something everybody ignores, right? And
Right.
it becomes so relevant when you're actually doing the business, right? You come to know
Absolutely.
that to actually stick with the business, you have to like it. You have to be passionate about the problem, right? See,
Absolutely.
like you were in Navi, right? That got you into Yenmo, right? So that is something which is founders market fit, right? So
Exactly.
definitely, yeah, that's quite relevant.
Yeah,
Exactly.
absolutely. So I think these are the two things that YC looks at that I think other great investors also probably think the same, which is back great founders and then see if the founders have like a founder market fit in the area. So if this idea doesn't work out, you kind of go and figure out something else, right? Because eventually, I think startup is more like finding like a treasure box in a forest, right? You're walking through the forest, and then you've told that, hey, I know I have a map that says the treasure is somewhere. I have to find it eventually. So you try all these different routes, and then eventually kind of hit the treasure box with one of the products. So I think that's what I think I like about YC, right? They kind of
Yeah, yeah.
bank
I
more
mean,
on
this is something which is
founders.
quite useful for a lot of entrepreneurs like me, right? Finding the founders market fit, right? And I think this got me into the next question that uh, I think I've heard you a lot of times saying. There are a lot of bad loan companies in the industry. There are a lot of bad loans companies, and we know a lot of them, right? People don't want to go to them. So, what is exactly a bad loan company or a good loan company? So, what is a bad loan and a good loan? What is the difference between them, Ashutosh?
Right. Yeah, absolutely. I think that's a great question. So
Hmm.
technically, any loan that can lead you to increase or let your net worth stay the same is a good loan company. And any loan that can detrimentally impact your net worth significantly is a bad loan company, right? So I'll put a case in point for Yenmo itself, right? So we offer loan against mutual funds. And what that means is if you take a loan from us and you have investments in, say, the equity market, right? And your investments are growing at 15%, and you take a loan from us at 10.5%. And at the end of the day, when you
4.5%, exactly. Hmm. Yeah, it's like you can go more than 15 also. Yeah. Hmm. Hmm.
20, 20, 25, whatever interest rate percentage is there. And that leads to an issue where because now you have taken an unsecured loan or a personal loan, right? You've taken more than what your net worth currently is. You kind of end up going down this debt trap cycle, which a lot of people talk about, right? Which is now
Yeah,
you don't have the
100%.
money to pay off this collection practices, which means if you're not able to repay a single EMI, you have people coming at your doorstep. You have people creating WhatsApp
Literally,
groups
there
with
are
your family.
agencies which actually, literally, there are agencies have come into contact who are given the task for this recovering the EMIs. So they are proper
Exactly.
companies for that. Yeah.
Exactly. So it's even like creating WhatsApp group with your family members, right? Or taking access to a lot of financial information or personal information of yours, like your SMS, your email, all of it, right? To just kind of underwrite your loan. So all of that comes under bad loan. While I feel a good loan should be one that is super customer friendly, right? Like you understand a person has come to you because he's in need of money, and there should always be empathetic. There should be no sort of aggressive lending practices, no hidden fees. In fact, one of the things that we decided, Yenmo, is we shouldn't have like our fee column should be probably a two-liner, right? Which is the interest rate and the processing fee. That's it. There's no other fee that we charge. And we're so sure that there's no other fee that if you come back to us saying, hey, I'm charged this fee and I was not told about this, we'd give you 2x of that amount back because we know we're not going to charge you anything else. Exactly. So that's the level that I want to ensure that a customer kind of sees, right? So the end of the day, I hope by the end of this, like a middle class person also says that, hey, Yenmo has become like the gold standard of a loan. Like if I do need a loan at any point of time, I should first check if I'm eligible for Yenmo because these are the guys who have super high ethical standards, will always ensure that none of my data is leaked, they're not taking any extra information from me, or indulging in malpractices of collection and all sorts of stuff like that. And then if I'm not eligible for Yenmo, you kind of go and see if you can kind of get a loan elsewhere. But
Personal
I
loan.
want Yenmo to become like a gold standard of taking a personal loan.
That's a brilliant like vision for you. Now, the from the good loan, I would start like you were earlier telling me that a lot of users who are currently on board, Yenmo. So they are using the loan from Yenmo to actually reinvest the amount. So
Right.
basically, why is it so so relevant, and why people are doing that, and why are so many people who are actually reinvesting it? How does it benefit them?
Yeah, again, this is not investment advice, but what we're seeing as a trend though at Yanmo is a lot of the customers, at least a lot of high net worth customers, right? People who have a net worth upwards of 10, 15 lakh in investments, don't have a lot of need for short term cash because they kind of can arrange it elsewhere. But they do have a need for uh, cash when an opportunity arises. Now, what that means is, say if there's an IPO that they want to invest in, right? And they need cash to kind of invest in the HNI sector. So there are different categories of IPO investments, right? You have the retail part, and then you also have an HNI segment in which the minimum ticket size is 2 lakhs or 10 lakhs, depending on the segment, right? So instead of holding cash in their bank account and just applying for the IPO and waiting, they kind of let their cash be invested in their equities or whichever market they want. Open a credit line with us because there's no cost to keep your credit line open with us. So they keep their credit line open. And then when they feel, okay, this is an IPO that I want to invest in, that's the time when they withdraw. And the interest is only applicable or only starts once you withdraw. It's not
Hmm.
anywhere else, right? So the outflow for them is very less. So they invest when they feel that there's an IPO that they want to do it. When the IPO lists, if they want the listing gains, they kind of sell off, close the loan. They ended up paying a fee of like the interest rate for only those many days, which is hardly like 0.1, 0.2% maybe. Um, or if they want to kind of continue to hold, they slowly end up paying the loan to us back over a period of time. But the gains that they've gotten from the IPO are much more than the interest. So that's one piece of reinvestment. And the other piece is people generally reinvest based on their risk appetite, right? They just want to make their money work harder. So they're already investing in a fund, in a mutual fund that's giving them, say, 15, 16% in return. They want some bit more. So they just take out cash from us and then reinvest it into the same mutual fund, which will get them another extra 2.5, 3% over the same fund, right? So now again, depending on the risk appetite, they either invest into the same mutual fund. Some of them go invest into stocks. If they feel the market has crashed, that's when they kind of take some money out, invest it, and then when they feel there's recovery, they ended up closing the loan. But yeah, that's an interesting piece. Like I did not
Yeah, that's a
expect a lot of
brilliant
Indians.
strategy actually for investment. I mean, yeah. So actually, diving deep into it, are there any particular assets they like to invest after taking loan from Yenmo? Is there, because
Right,
you must be aware of a lot.
right. So as I said, I think the highest category as of now has been IPOs, for which it's highly used, and the second highest has been mutual funds, right?
Okay.
So whenever I was under the assumption, I was a little skeptical of this whole situation, thinking people are investing because of a bull run, And then that's going to be an issue when the market crashes. We don't want our customers to face significant losses and stuff, right? But interestingly, a lot of customers actually withdraw when the market crashes, right? So they're aware that, let me keep a credit line open with Yenmo. And then when the market significantly crashes, that's when they start withdrawing more funds and investing it back into the market. So the second has been generally equity mutual funds that people invest in. A couple of innovative ones have been people have been using the money to invest in like supply chain financing, invoice discounting, these other alternate investment sort of vehicles into maybe some corporate bonds, etc. Also, but yeah, majorly have been IPOs and mutual funds as of now.
That's a great advice, like, of course. So let's get a little bit technical over here. So taking personal loans has been there forever, right? And but taking loan against mutual fund has just like it's a pretty new concept, right?
Right.
So basically, if someone has investments in mutual funds, right? So what is the process of them taking loan against mutual fund with Yenmo? Let's consider. So can you explain the process
Yeah, I
for
mean
someone who's having an investment?
it's super simple. And actually, if you want to compare this across banks, right, I'll talk about what Yenmo does. But if you were to do this like 10 years before and go to a bank and say, hey, I want a loan against my mutual funds, it would be a long drawn process, like 7 to 10 days, where you go to the bank, give proof of your securities, get them pledged from whichever depository holds them, show that pledge certificate to your bank, and then there's a bunch of papers signing, and then maybe at the end of 7, 10 days, you end up getting a loan or credit line against your assets, right? Versus with us, the process takes 5 minutes. You log on to the app, fetch your investments digitally, right? So there's a single OTP, you fetch your investments across all your investment apps in one place. Decide which funds you want to pledge. Go ahead, pledge those funds. We have a short agreement that you can sign. Sign that, set up an e-mandate, which basically says, hey, we're going to deduct if you end up withdrawing whatever amount, then whatever applicable interest would be there, we'll automatically deduct it from your bank account so that you're not penalized for any late fees, etc. So you set up your auto pay and that's it, you're done. So the whole process is like 5 minutes. Fetch your investments, sign an agreement, do an e-mandate, pledge your funds, and that's it.
That's like
Uh,
super simple. Like it
Absolutely.
sounds so complicated, but it's like you've made this whole process like super simple for anyone, literally
Yeah,
anyone.
absolutely. I think the thing that we've emphasized on is one of the and I kind of am proud of it being a differentiator also among other people who might end up coming to the space also, right? Is instead of kind of cutting steps and making things optimized for a conversion flow, right? Like, hey, just tap, 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 and in 5 taps, you've opened an account. We've deliberately added steps just to make sure you're 100% aware on what's happening, right? Like just to make sure you're 100% transparent on what you're going to do, right? So these are the mutual funds that you're going to pledge. This is the interest rate that's applicable. In case you default, these are the charges. In case you don't default, there are no charges. And just making sure every detail of the loan is like crystal clear to you. So there's no, at the end of the loan, you shouldn't feel that there's been something hidden from you, right? Or there's a surprise at the end of the day on how did you do this, right? So one of the things that we also do is we pledge the funds at the very end of our journey, right?
Hmm.
Instead of pledging it at the start and then saying, "Hey, you've pledged your funds. You're not you have to take a loan from us because well, you've already pledged it, so you might as well. Or if you want to unpledge it, you need to pay us some money, right?" So we've
From
deliberately done
this
those
from
small
this
things.
pledging point, I would say that there's a generic conception over here that people don't want to take loan against their mutual fund because they think that are my mutual funds safe or not when I'm taking loan against them. So what do you think
Right.
about that? Because there's a common perception over there.
I understand. Yeah, no, this is actually a common thing among our investors also. So we've kind of talked about that within the app flow itself. So all the mutual funds that you hold are not going anywhere. They're still 100% owned by you. So all the something. It's just that you sign an agreement saying that, hey, I'm taking this loan in case I default. There is a right that the lender has to take over these funds in case I default. So that's the agreement that you sign. So the only case where your funds actually do not end up being yours is in case of you defaulting, right? And there's a long drawn process for that. It's not going to be
Yeah, it's
that,
a long tenure, so yeah.
yeah, if you don't pay the interest today, I'll sell your funds tomorrow, right? It's not as fast as that. We will maximize the time to kind of ensure that, hey, you have an opportunity to still pay your funds, and over a period of say 15 days, 20 days of us constantly reminding you of not like of paying back the interest. If you then fail to do that, then the liquidation process happens, and that too your whole investment is not liquidated. Like say if you have an outstanding interest of 1,000 rupees, then only that many mutual funds that is required to pay off that 1,000 rupees will be sold. The rest will still continue as is. And the reason for that is also not because we want to close the loan early. It's because if we keep it longer than that, your CIBIL will be impacted. And being the whole good loan company, we took a call that, hey, we would not want your CIBIL to be impacted because that affects your future prospects of taking a home loan, a car loan, and all of that, right? So we'd rather sell that small amount of mutual funds and cover your interest and not report you as a defaulter to CIBIL, right? So that's the call that we've taken. So, I mean,
Yeah,
your mutual
something.
funds are
I
super
think
safe.
this is something which is very common with teenagers. Like because I'm just considering my example. Like people just like to take loans from these companies like Simple and all, right? Simple Slice, and they end up not giving it back. Right? They end up defaulting it. So it starts affecting the CIBIL, right? And they're literally purchasing from Amazon and all, and they're using this credits, right?
Correct.
So this is something you guys have worked around. That's amazing. So what I have noticed till our conversation is that Yenmo is making everything possible for the customer. It's a completely customer centric, company. Or because I've also noticed some of your LinkedIn posts where you have directly posted the WhatsApp messages of your customers, like how they must like they like
Yeah,
you so much, right?
right.
So how is it like? Is there some experience where you saw, okay, this is the impact which I got into one of my customer, and you were very proud of it? Like, was there any experience in your knowledge?
No, absolutely, man. I think one of the messages that I still hold very dear to me, and we're still in touch with the customer, was actually one of the very initial customers. Like, she was one of the first 10 customers that we had at Yenmo, right? And she was a mother of a 5-year-old kid.
Okay.
And what had happened was she'd come on our platform, and this was a time when our app process was not very seamless as it is today. And she still ended up completing the whole process in like 10, 12 minutes, right? And I was surprised, and I called her up and I was like, hey, like, I just noticed that you completed the process and took the loan. And she was talking to me with like tears, right? And I was like, hey, what's happening? And she's telling me that she started a fund for her 5-year-old daughter last year, like a year before she took a loan from us. And the goal was when her daughter kind of like gets 18 or so, she'll move it into her name for her education, etc. Right? So there's a lot of emotional attachment to it. But today she was in a situation where she was in need of money, and the only way that she found out was, by liquidating those investments. And she's super sad because she had all those dreams about growing those funds to see them grow more. And now redeeming from them felt like a very emotional decision for her. And coincidentally, that's when she saw a LinkedIn post of us launching, right? We just launched like 2, 3 days before. Um, and she was like overjoyed. She was like, I couldn't believe that you guys were doing this. And then she just ended up taking the whole, like, completing the process and taking the money out as soon as possible. And she was so thankful to us over the call. And then even dropped a couple of messages to us. And I think that just changed us, right? We're not just a simple transactional company that, hey, I have money, you need money. Let me just give you the money and we move
That
on with our lives.
relationship you're trying to build is I think this is what fuels the business. No, the emotional
Exactly.
impact.
Exactly.
It
I
is,
think it's been like a kind of impactful moment for the whole team where we all were moved like, hey, we're actually building something that has an emotional impact on people's lives, right? This is not some just a transactional thing that, hey, I just paid you this 1 rupee and like just move on. This is actually something that's impacting people's life in a significant way outside of the monetary value that we're giving. And I think that's just beautiful. I'd love to see that happen for billions of, yeah, people in India, right? Like all the people who are in debt traps or not being able to use money wisely or not being able to take loans wisely. I'd like to see Yenmo become the one-stop place, right, where they realize they can take money without having to kind of worry about falling into a debt trap or being trapped in this bad cycle. This is actually something that ends up helping them. And they look back and actually are grateful for Yenmo existing in this world, right? So that's what I also look
Well,
forward
this
to.
is something which will also, improve the image of a loan company, right? Slowly, as we transcend, as we create more impactful situations like this will actually improve and this, I can clearly see that this is your vision. Nice. So that's really amazing, like amazing discussion on that. Okay, so it was really amazing talking with you, Ashutosh, on this amazing discussion with around entrepreneurship and Genmo in general. So I'm looking forward to more conversations with you like this. And with this, we are ending this. Thank you, everyone. Thank you, guys.
Absolutely. Same here, man. Super fun talking.